2023 has been a hell of a roller coaster for Walgreens Boots Alliance and its shareholders, with the stock plummeting over 40% year to date. Why, might you ask, has this happened? Well, Walgreens has been plagued by seemingly one issue after another. Okay. Overall, retailers in general have been plagued with a surge and increase in shoplifting. So, why is this an issue? Well, what happens when you take a company that routinely puts up bottom line profit margins of, say, 3.5%, and these are pretty normal bottom line profit numbers for a major retail company or a company that has most of their business interests tied up in brick and mortar retail, and you increase shoplifting by any substantial amount, even 10, 15%. I don't know exactly how much shoplifting has gone up, but even increasing it by that much, what would that do to these profit margins? Well, it would, of course, squeeze them even harder, which, of course, will have a hugely negative impact on EPS. But wait, Walgreens is trying to do something about that. They launched a prototype test run type store where they're implementing some measures and they're seeing how it goes. So this store is basically designed to virtually eliminate the possibility of shoplifting. They have only 2 aisles of openly accessible goods to the shoppers who are browsing. The shelves are shorter, about 5 feet, so it would be more difficult for people to kind of hunch down and hide what they're doing. And other goods are available, but must be ordered via an electronic kiosk in the store. There is some discussion of integrating maybe app-based ordering for like pickup or things like that, instead of the kiosk or in addition to the kiosk. Now, as far as I can tell, this is only one location, and some people have said that's too extreme, it's going to turn off shoppers. So what I think they're going to do, and why this is being only tested very small scale, they're going to see if it has the desired effect of eliminating theft, or almost completely eliminating theft, plus see if the effect on sales isn't so bad. And if it achieves that and overall makes that location more profitable than other locations, then I would expect to see them testing it at a higher number of locations for a wider test. And then I would expect, if that works, other retailers may take some notes and follow suit. But too early to say if this will really have much of an effect or do much for Walgreens. But to their credit, this is an issue that they are attempting to address. And it's not only they who are experiencing the shoplifting issue. Another particular issue that pharmacies in retail are facing is specific to opioids, where there have been a rash of lawsuits lately. This is an older article from end of last year, and the number ended up being a bit different. From my recollection, the Walgreens portion of this 10 billion, which I think ended up being higher than 10 total. It was supposed to be 10 total between Walgreens and CVS. Walgreens, their portion of this payout ended up being, I think, just over 6 billion. Feel free to fact check on that. But this is mainly just to show, like, hey, A, B, C, etc. happened to Walgreens, and that's why the share price is in the basement. Is it a bargain basement, or is it just a basement? I don't know. But anyway, you don't want to see your company that you hold shares in being slapped with multi-billion-dollar lawsuit payouts. That sucks. Now, there's a few other headlines of interest. One is the CEO departed. That's right. We went over A and B, but this one is C. This is the most recent issue for Walgreens. Now, they had a pretty rough earnings and a decrease in their forward guidance, And also, yes, the CEO, Rosalind Brewer, is gone ski. I believe the CFO, don't recall the name, also gone at this point. So your C-suite is looking a little light these days. Like, who's going to fill these roles? Well, that has yet to be determined, but suffice it to say, I would speculate that shareholders haven't necessarily been pleased with the way things have gone lately. Possibly the leadership, the capital allocation, the vision hasn't been what shareholders wanted or expected from Rosalind Brewer. And now we do have to deal with lower share prices because the market hates uncertainty. But I also think if this CEO wasn't doing a satisfactory job, I think it's best that they rip the Band-Aid off and find the right fit. Now, my understanding, I think it was in a press release, was that they were planning on replacing Rosalind with somebody that has, I believe what they called it something like deep healthcare experience or credentials or whatever. So that tells me that they want their primary care, it's village. They want that. You see it on a lot of physical Walgreens locations when you drive by. It's got like the Village MD thing on there. That's basically like a very small, like a little pop-up clinic, basically inside the same building essentially as your Walgreens. So you've got a situation where you can go to see a doctor or a nurse practitioner or whatever, get written your prescription for your antibiotics or what have you, get it filled in the same building before you leave. And, hey, if you need shampoo while you're there, that's an option too, because it's Walgreens. They've got, all that kind of stuff. So that, I think, is the vision for the future. But getting those clinics all rolled out and built up and, profitable, etc., I think not Rosalind's strong suit. I think she was more credentialed in retail, which, let's face it, Walgreens pretty much already has as many retail locations as is reasonable to have. And rather than focusing on the retail part of it, it's focusing on the synergies, how they can take advantage of that, real estate, that big physical footprint they have, and do more with it than just retail in order to grow into the future and be more profitable. And I think if they find somebody that has that vision to get them there, we'll be saying Rosalind who in a couple years. Now, that being said, what is the future holding for Walgreens? Well, it's been a bad year. I'm not going to mince any words about that. But analysts see this going, and these could be amended at any time. They may not have been amended since the most recent earnings, and so we could see these change soon. But for the data we have access to at this point, the numbers seem to be middling about in the 4 to 450 range from now to 2025 for yearly earnings, which, at current prices, we're talking about 5 times maybe their 2025 projected earnings. That's a pretty low multiple. We're seeing the very, very small number. Now, granted, 3 analysts reporting is, and basically speculating out this far into the future isn't many, but they see it growing to greater heights than where it was at even in 2018 when they were over $5 a share in earnings with a share price in the 80s. So, frankly, I personally think that Walgreens doesn't deserve like a 5 or 6x multiple on earnings. I think something like probably like 10 or 12 is probably somewhat reasonable, really. Um, Now, if you run like a DCF using, assuming that they hit $4 a share this year, next year, 2025, somewhere in that time frame, um, and start growing from there, using a 15% discount rate and relatively slow mid single digit growth on the bottom line, you still come out with it being a mid 30s stock with a 15% discount rate. Now, I usually don't punish Walgreens for their tangible book value just because my understanding is a lot of that's tied up in long term leases, which I don't know if I really like penalizing a company upfront on their valuation for their next like 7, 8, 9, 10 years rent, however much the average length of term is remaining on their average lease. That's just me. That's just kind of a preference thing. I prefer to value them more on the stream of earnings that they're likely to get in the future. Now, this could be wrong, right? They may not get to $4 a share in EPS in the next couple years. In which case, you know, well, that's why we use a higher discount rate because of the uncertainty and to sort of beat them up and show basically the fact that it's still looking like there's a pretty good margin of safety in terms of the value at today's price. Now, my basis is obviously higher than today's price, but this valuation is kind of why I'm not like sitting here freaking out, trying to, dump my Walgreens, etc. I think it's very unlikely that Walgreens disappears, goes to zero. I'd be shocked if Walgreens wasn't here in 10 years. And I think right now it's been a really hell of a bad year for a pretty solid business overall. Now, the stewardship definitely needs to be in place to get them where they want to go. And there are no such thing as guarantees, but being okay with holding something or even continuing to buy more when the market absolutely hates it, well, I think that's what is most likely to lead to long-term outsized returns. If you only buy stocks when everybody else loves them and they have recent, runaway high performance to the upward direction, well, you end up buying Tesla basically. And I don't buy Tesla. So, there you go. That's kind of my update on what's been going on with Walgreens. It's been a while since I've covered them on the channel. It is one of my larger holdings. Let me know your thoughts below. Do you think the CEO leaving is a good thing or a bad thing? Do you have Walgreens? What's your cost basis? Are you considering selling out for a tax loss harvest? Are you just holding? Are you averaging down? Let me know what you're doing with it. Take it easy, everyone, and have a wonderful day.